Stocks have built wealth for over a century. Crypto has built millionaires overnight. But as we are about to step into 2026, the question isn't just about returns. It's about which investment makes more sense right now. Should you stick to the traditional markets or dive into the digital revolution? Let's break down the facts, the risks, and the future potential of both crypto and stocks. When you invest in stocks, you're buying ownership in a company, real businesses that earn profits, pay dividends, and grow over time. When you invest in crypto, you're buying digital assets built on blockchain technology. Some act like currencies, others like platforms or utilities for decentralized apps. Both represent innovation, but they're built on completely different systems. Stocks on corporate performance, crypto on code, and community. Here's the hard truth. Crypto is still the Wild West. Prices can swing 20% in a single day. Bitcoin alone has dropped 80% multiple times in its history. Stocks, on the other hand, are far more stable, but not immune to crashes. The 2020 pandemic wiped out 30% of the stock market in weeks. The difference? Stocks recover slowly with fundamentals. Crypto recovers faster but more unpredictably. In short, crypto gives high risk and high reward. Stocks give lower risk but steadier growth. Let's talk numbers. Over the past decade, the S&P 500 returned around 10 to 12% per year on average. Bitcoin, even after massive drops, its average annualized return since 2013 is over 100%. Insane, yes, but unsustainable in the long run. Most experts expect crypto to mature over time, offering lower but still stronger returns than traditional markets. The key is balance. Too much risk and you burn out. Too little and you miss opportunity. Crypto wins big on accessibility. You can trade it 24/7 globally with nothing but an internet connection. One major advantage: regulation. Investors are protected by systems like the SEC. Crypto still runs in a gray zone where scams and rug pulls happen every day. So while crypto democratizes finance, stocks still offer the safety net of decades of legal structure. Stocks represent companies that make things you use. Apple, Tesla, Netflix. They're tied to real world output. Crypto represents the infrastructure of a digital future, DeFi, NFTs, smart contracts, tokenized assets. In 2025 and beyond, both worlds are merging. Big corporations are adopting blockchain tech, and traditional portfolios are adding crypto exposure. A modern investor doesn't have to choose sides, they can own both. In Q4 of 2025 and in 2026, stocks will likely continue steady growth, especially in tech, green energy, and AI. But crypto could explode again as global adoption rises and governments introduce clear regulations. The smart play: use stocks for stability and crypto for potential. Think of stocks as your long term foundation and crypto as your innovation bet. Together, they future proof your portfolio. So, which is smarter in 2025, 2026, crypto or stocks? The answer isn't one or the other, it's both, in balance. Stocks build wealth slowly. Crypto can multiply it if you survive the volatility. So, what's your mix for 2025, 2026? 80% traditional, 20% digital, or the reverse? Let me know in the comments, and don't forget to like, share, and subscribe for more market breakdowns that keep it real.